All righty.
Roll them up.
Yeah,
Everyone's casual.
there's at least two other people that are gonna come in, and we're gonna talk today about the exciting topic of first-time homebuyer programs and down payment assistance. So I say that with sort of a semi-roll of the eyes. Except for the fact that we need it, right? And we get people asking about it all the time. So I think the important thing here is it falls in the category of getting the creative and knowing the options and knowing that this is out there. Now, if you bring somebody to us who says, I'm first-time home buyer, I want to know all about the programs, I'm gonna get the information from them just like I do any other client, and I'm gonna steer them in the direction of what's best for them. And that's all they need to know, that's all you need to know. But if it's one of these programs, then for sure, we got these programs for it, okay? So this is not my personal area of expertise. I have team people who do this for me, but most importantly, I have my manager here who knows these programs like the back of his hands. So I'm going to just let him tell you the highlights of programs that are available, and we have handouts this time. So take it away, Bill
Good.
Green.
My name's Bill.
Oh, hey,
Nice to
Bill.
meet you.
Hey, Bill.
What's your name?
Terry Lynn.
Terry Lynn.
I'm Jocelyn.
Jocelyn.
Nicole.
Nicole. Salima.
Joey.
Joey.
Raul.
Raul. Nice to meet you all. I stood up last time, but I'll just kind of sit down and just kind of go through. So Selena, we had our first referral for a first-time home buyer, and maybe you want to kind of recap the referral, and I'll recap the conversation. That will kind of get us started.
Yeah, so
Money.
Later, I will.
Go ahead. What was your first referral?
well, so I attended the class a few weeks ago and got introduced to the first-time homebuyer program, so down payment assistance programs that I wasn't familiar with, and I had multiple people that I had in mind who I felt like I wasn't able to help because they didn't have any down payment, who could potentially be able to get a loan, but I needed something like this, so they actually randomly called me right as I thought about them. They called me the next day.
It always works that way.
It's so weird. So she was like, I'm trying to get pre-approved, we're trying to move, and I reached out to Bill, and I was like, can you help them? And he set up a phone call right away and updated me on it really being possible for them to get a loan with even their, with them not really having a down payment in place. So, and I think I had worked with someone else before and it didn't work out for them. So having the right resources really, really helps, right?
So I'll thank you for the referral. So that was, it was good to talk to your client. My name is Bill Green. I've been in the lending business for a couple of years now. I don't want to say how long anymore. It's tough,
I've been saying like 10 years. But
Yeah,
I don't know
10
how many.
So it's funny because, when you come to these meetings, you hear all of the, information that's shared with the agents and such. And we are going into a different cycle, right? We're in a different cycle right now. And, for the past 2 or 3 years, the market has basically, the LA market in particular, has ignored the first-time home buyer, okay? The first-time home buyer has actually been pushed aside by who? Does anyone want to guess? By the investor. Because the investor says, I could buy that condo for $500,000 and at rates of 3% or 4% on my hedge fund, I could make that work with rents and I could easily buy that property faster, quicker, and close it than the actual first-time home buyer because they're coming in with a no contingent offer or, so that's starting to change a little bit. Now there are some markets, Georgia, Midwest, you know, where the home buyer will still compete against the investor. But right now we're kind of at a leveling point where the cost of money has become race at it so high that the investor says, well, if I'm going to pay 6.5% interest, I need to make Y back on my investment. And so, you know, a $550,000 to $700,000 condo, for example, might not be as attractive to that investor anymore, right? Because the rents may be $2,500 to $3,500. Let's just, you know, give a range depending on the location. So when Salima gave me her first referral, my first question to the first time home buyer is, how much can you afford? Like, what can you physically afford, you know, to buy the house? What's your budget? And I think they were in the neighborhood of 3,000, they said, maybe 4,000. And after the discussion, you know, I was able to say, listen, to get you into a home, we kind of have two programs. One has an income limitation, one does not. But if you are interested, we can kind of, you know, continue the dialogue. And we did, and, you know, in the end, they're under the income limitation of, it's like $112,000, so they make less than that, okay? They don't have the down payment, so they're basically eligible for either program, okay? But, you know, I'm gonna narrow today's presentation down to two programs, okay? One is gonna be a conventional program with an income limit, so we don't confuse anybody. And one would be your standard FHA with no down payment. You have a question?
All of these require taxes.
Yes.
Yeah.
Now, we do have the Fallout program. It's called a community lending program where we do no income verification, but they require 20% down. Okay.
Actually.
Yeah. I think if you're under $1 million, you can still do it, but we have to double check. Those guidelines have changed. They've gotten more restrictive, but that 20% could be a gift. So, you know, they don't have to, you know, have a borrower requirement of their own funds. So I think personally right now, so let's go back. I did a video post about the 10% forgivable second. You guys have heard of this? It kind of came out, it hit the news. The news station picked up. California Housing Finance Authority is a housing authority that provides down payment assistance for customers, okay? And they announced this year that they're going to offer a 10% down forgivable second. So it would be a 90% first and a 10% second, okay? But the problem is their income limitation is $68,000. So they're basically ruled out of most of the LA market, okay? That, you know, that kind of number, I think the maximum purchase price is about $360. So you're looking more like Kern County, Central Valley, maybe some parts of Riverside, maybe some parts of San Bernardino.
I was wondering, what did you get for 68?
I mean, they put it on the news, right? And
Right.
then I have to answer, you know, like,
Right.
okay, yes.
Where will I get?
Yeah, I'm like, I haven't seen 360 in a long time, you know, for a first time home buyer. But, you know, parts of Kern County and these others, yes.
So if someone does one of these programs, my problem in the past has been that they took so much longer to close that sellers wouldn't.
And that has been the case. That is part of the issue because there's so much demand for the programs, but there's a lot of fallout, right? So you end up working on a lot of loans that don't work. And so the investor that we go to, we're subject to that. Now, this program right here, 45 days. I can close it in 45 days. I think it's reasonable if, you know, the seller is saying, hey, listen, first time home buyer, this is the program. We're, you know, totally forthright with you. We're going to show you all the documentation that you need, proof of funds, the program. There's no hidden, you know.
What's your loan contingency gonna be on that loan? Like, you're gonna tell me to put in the contract?
25 to 30 days.
Oh, okay.
Yeah,
And
I can't do
that's also
17.
FHA?
No, this would be,
The
so
conventional.
this is gonna be a conventional side,
Okay.
FHA side.
Yeah,
We're gonna
that's-
super simplify it. today.
Right, 'cause I know
Love
that
it.
they say you have limited housing pool that they qualify
Well,
for. So
maybe
they don't
most of
all-
our FHA condos are no longer approved. That's what has happened.
Got it,
I can give you a list and that'll be, can you write that? The FHA approved condo list. We can give it to you for all of LA County.
Okay,
Okay.
but still on single family. Yeah,
I mean, again, this doesn't have an income limit.
right,
It has a loan limit.
right,
Okay, so the loan limit would be 647, 200. Okay,
okay.
and then they would offer up to 3.5% down.
And what would be your closing time on that one? And
That one I can do in 30 days or less.
and a loan contingency?
And that, I can standard, almost
Like,
standard. I can't do 10, but I can do standard 17 to 21 days.
oh, okay, that's much better, okay.
Yeah, but that has mortgage insurance.
But
This one
a
does not.
seller's probably gonna take that over that in my experience.
In your experience, it's time.
Yeah.
It's time.
Yeah.
Okay, and honestly, I'll tell you who the investor is. It's Luther Burbank. You probably know who they are. They're, you know, they've got an office right here. We love their program. We hate their time. But I did do this loan, and it was a great loan. I'll tell you the example. Okay, the reason this comes into play, okay, is do you know how much FHA mortgage insurance is by chance? Does anybody?
It's on that amount, six something, it's probably 200 a month or something, right?
More than that. It's
Oh.
0.85% of the loan amount.
And you can't, it's not, doesn't fall off after so many years anymore, right? It's for the duration of the loan.
You should stand up here.
No, I'm
It's
just.
no longer
Sorry.
cancelable. You can no longer cancel the mortgage insurance. You have
That's
to
a bummer.
refinance
You
out.
have to refi.
Yeah,
right?
you are permanently attached.
That's
at
a
the hip.
bummer. That's good.
You know, it's a bummer, but again, like Ray said, and I'll use some of Ray's words, we put them in an arm,
Right,
put them in a 5-year arm, and in
Right.
5 years, they'll have probably enough of, between the payment and the appreciation, they may have enough money so that we can just refi them in a conventional loan.
cool.
So those are the programs that you like to choose.
Anything to get them in a house. That's the
Yeah.
hardest thing is getting in.
Yep,
Once you're in, you just get more and more options as you go.
what's the loan limit on the conventional? The loan limit?
647, 200.
Oh, okay, and that, and the FHA was
Same.
same, 647.
Okay, so 1% would be $6,000, so that's $500 a month. So it would be like $480 a month in mortgage insurance. That's why it's a lot.
So it's like a higher interest rate, basically. I mean.
Well, they're both high rates. They're gonna be in the 6s, both of these programs, and maybe even the 7s. Okay, but they're in the 6s now. Okay,
Okay.
so let's talk about FHA. Okay, FHA is a great program for most states.
I've used it, but when you could.
California not being one of them right now. Okay, now I used to manage at my previous role, I used to manage the entire Central Valley. Okay, FHA is 40% of the business there. You know, it's almost half of the business. And if you add California, Cal HFA, you add the Golden State Finance Authority, you have the self-help, there's an enterprise that does, down payment assistance, combined with the FHA, it's probably 55%. Okay, so, but those home prices are sub 600,000 for the most part, 80%. Okay, we're not there. What would you say the number of listings under 600,000 are right now?
They're all.
They're all condos, right? Or, maybe non-lendable properties, right? Just based on the condition. So I think what you're gonna see though, in the next, 3 to 6 months, you're gonna see properties that are less desirable, right? Stay on the market a little bit more. And after this little Q3 spike, we were all kind of predicting there's a little pent up demand that, trying to put people in a house or move to Santa Clarita to put your kid into school or, downsize, because you're kind of making a move, you're gonna see a little, then we're gonna get into our normal winter, period where just your number of purchases are just gonna go down. I think you'll start to see 650 move down to 595, like that kind of thing, or 7 move to 625, or, some variation of that. Okay. So this FHA program, simply put, zero money down.
Oh, zero money down.
Zero money down. The 3.5% is from the lender. Okay, and there's no interest and no qualifying payment for that down payment. Okay, but it only goes up to $647. So if you wanted to buy a $700,000 property, right? You would get the 3.5% down, and you may have to put the other down from a parent or a relative or a gift. Or you can borrow out a 4-year 401k program, for example. Not get it. This program has no income limit, say it with me,
No,
no income limit, okay?
Oh,
So FHA all day, okay? But the payment on an FHA loan, 480 an MI, 6.5% interest rate, gonna be steep. It's gonna be,
Upfront PMI too.
well, the 1.75% gets built into the loan. So you don't pay it, you just, you finance it. So, you're looking at a $4,500 a month. Taxes and insurance are impounded, you're looking at $4,500 a month, probably closer to $5,000. Which, to own a house in LA, $5,000. It's kind of typical, right? I mean, it's kind of, that's what an $800,000, 20% down, 5.5% rate with the property taxes and insurance.
Yeah, to rent something decent, it's 4,500.
So how much down?
zero, but
Okay.
3% from the lender,
It's the lender finances it, basically.
lender finance.
They basically don't charge interest on the 3.5%. You just give it to them and you,
Oh,
and
okay.
you pay it back
So
if
they
you refi or
literally
sell.
don't have to bring any money to it,
Closing costs,
closing costs. Okay.
which, how would we deal with closing costs as realtors now?
Credit
From,
the seller.
that's how you get them in. And how much do you need to close a house? What's your average amount of closing costs? No, just the closing costs,
10K.
not you.
Everyone wants a easy
I was
answer.
gonna say,
Cheater,
Very right.
cheater, you look at them every day. How much is it to close a $600,000 purchase? Escrow, title, lender fee, appraisal, junk fees. How much? Huh?
Close to 20.
Escrow, property taxes and insurance. How much?
Property taxes are at least 6.
Let's call it 1.5%.
Okay, right.
What's 1.5% of 600,000?
600.
9,000.
Yeah.
Okay. So
Just call it 10.
Wow, that's a lot less. So you're saying that if somebody got this loan on this side and they refi to get out of the PMI, they're giving back the 3% to the lender for getting.
they're
out.
not giving it back, they're just not keeping it, right? They're borrowing the money at zero interest.
Okay, so it's not a gift, in other words. So
It's
if
not a
I
gift.
decide to
It's
refi
not
out, so I
free.
wanna get rid of this 480 monthly payment, then I'm giving them back their 3% to get out.
Is it like?
You're not giving it back, you never got it, really.
So it's.
You only got a 96.5% loan.
Right.
So you're just refining 96.5%.
Right.
You're not refining 100%. So you're not giving them back the extra money.
But it's like forbearance when they tack it on at the end, right?
It's a second lien that just gets wiped out. That's all. Okay,
So they have to come up with 10,000. They have to have 10,000 from somewhere.
inequity, right?
Yeah.
In theory, inequity is probably, and it's not considered cash out, it's just a rate of return.
Oh, so they can use it. Then what?
So let's say the house is worth $750,
Yeah,
they get their $10,000 back, as you said, plus the original or whatever the new.
oh, no,
loan
I meant
is.
when purchasing.
When you purchase, they put the money in
They have to-
escrow to help you close the loan. The 3.5% comes from the investor, the lender.
I got it.
So it's
Right,
basically
that's
like
the
putting
down.
equity back into the house, so it's sitting there in
Yeah.
like.
No, I get that, but closing costs.
Closing costs are different. That's what
Right,
the
that's what I'm
borrower has.
asking. They have to come up with 10,000.
But again, if I wrote an
As a
offer,
seller.
you're the listing agent, okay? I'm the buyer's agent. Cindy's our buyer, okay? I said, listen, I know the house is listed for 6. Here's what I'm gonna do. I'm gonna write you an offer for 609.
Right, and you pay.
You're
for
gonna give me
closing costs.
1.5% for closing costs.
Yeah,
Cool?
yeah,
As long as it appraises.
yeah,
I mean, 6 and 609,
yeah.
a 1.5% appraiser's
I
not gonna.
did that back in the day.
That we all did that back in the day. Trust me, when I broke in the
Forgot
90s,
about it.
you had to do it that way.
Right,
My first purchase was, and I'll be very candid with you, It was owner occupied. You know, it was a 3% down, conventional MI loan with, if you know the name Troxler and Associates, it's a name that goes way back. And I bought a $147,000 Canyon Country condo that my family still owns to this day. So that was it. I thought that was the end of the earth back then, but you know. But if the earth was flat, you'd fall off, you know, but that's what it was. I lived in Westwood at the time, so you know, like I had no concept of where, what that was, right? And my interest rate was 7.5%. So, you know, I mean, and it's not like I had to walk 5 miles to school and back, you know, I'm not trying to, you know, make it like that type of story, you know what I mean? Uphill on both ways. You know, it's not that type of story, but it is, you know, we're gonna have sellers that really want to sell property. Investors like Ray and his group, they don't want to buy a less than 2 cap rate on a condo in Warner Center. You know, that's not what they want to do, but you know, a new up and coming, you know, person that graduated a couple years ago, they just broke that $100,000 a year mark, or there's 2 incomes. There you go.
Right.
Right there. You know, I mean, what I see in the marketplace today is companies like Amazon. This is a true story. They pay $155,000 if you're not in an executive band. They pay $155,000, but you know what they give you on your offer letter? 500 shares of Amazon.
Oh, wow.
And that vests over the next 5 years. So and back when Amazon was trading at $2,000 a share, that was $1 million offer. So yeah, I'm making 155. I'm not rolling in a cool car yet, but you know, I'm able to buy my house. But in 5 years, when all those shares vest, I'll make that money. And that's what all these big techs are doing. So if you hear, I grew up in West LA, so if you hear Silicon Beach and all these younger, you know, people that are coming out, they're not making gigantic salaries. They're breaking the 100K mark because that's kind of where you have to be, but they pay them stock options.
Right.
Or
Right.
restricted stock units, they're grants.
Right.
So we have to get them into a house because they, I mean, 100 grand living on the west side, they're not saving any money.
Bill, on this FHA program.
Yes.
Since we're really talking condos, if anything, that we're gonna put in here.
No, this is
Or out of LA.
for LA, this is some parts of Simi. Okay, you could see that
True.
near your house in West Hills, right? You saw 6s, right? Or 7s becoming 6s now. Okay, all of Antelope Valley. You know.
Okay, well, anyway, my question was gonna be,
I'll pass this out.
you said we would get them the list of the FHA approved condos.
Yeah, if we can go online right now, I can show you.
However, we can do single unit.
Yeah, you can do single family houses.
Can you talk to them about that?
So, you know, Antelope Valley, Lancaster, Palmdale is probably the #1 purchasing power place. So you live and rent in the valley, you want to buy your first house, you're going to move outwards, right?
Yeah.
So KB Homes, Richmond American, there's a number of new home tracks that are out there that get sold out in minutes, by the way.
Actually, that wasn't what I was asking.
Oh,
What if I bought a condo and I'm in this program?
yes.
and I bought a condo in Canoga Park,
Yeah.
you can get the FHA to approve that single condo.
Oh,
correct?
so that's a different
The
question.
unit versus the
So
building.
some of these buildings are not FHA approved.
Right.
So what we do is we call it a spot exception. So a single unit approval through FHA. Okay,
Why aren't they approved?
they expired,
The majority are not approved.
or, well, remember we had the Northridge quakes, so some of those don't have the warranties anymore that they once had. And then during the from 2000 to 2010, we had the largest condo conversions, remember? When they had apartments that were converted to condos, they didn't go in for FHA approval at all. They went in for Fannie Mae conventional financing. So they were never ground up FHA approved condo constructions. They were converted apartments. They really weren't converted apartments. They were built as condos, but in the 90s when we had our problems, they were all leased out. But they still had their condo map recorded, and then developers came in and then, like Burbank is classic, you know, like lots of places in Burbank, Glendale, you know, they just did. I mean, we funded so many of those loans at Countrywide. I mean, we probably did the most in the entire San Fernando Valley. Our team, our own Glendale team, literally was. I know. I remember a realtor right now, Alberto Lyon, the condo king. He was notorious for doing all these condo conversions.
So how long does it take to get a spot approval?
That's probably a 3-week process.
In addition to,
No, not on top.
oh,
It can be
You have
inside.
to start it.
Yeah, but you just need everything from the condo. I mean,
right,
condo map, budget, bylaws, you know, insurance, evidence, insurance, minutes, you know, you need the whole.
they have to be in good standing.
You have to be in good standing. They can't have delinquencies. They can't have a high delinquency factor rate. So single unit spot exception, that can be done for
And
FHA.
can you do it before going into escrow if the client's willing to pay for that? I mean, I assume.
There's no premium to get a single, there's no cost to do a single spot exception
What
approval.
isn't the HOA gonna charge for docs?
Sometimes the HOAs will charge for docs. It depends how good your escrow officer is. Most escrow officers can get all of those docs and then put it on a line item for later, if they'll front the cost, if there's truly one.
But we're not in escrow yet.
Technically, by rule, the seller is supposed to provide that, but somehow over the years, we've moved all that cost to the buyer.
It's
So
hard to get the whole complex approved, correct?
Yeah,
But you're saying the spot approvals are just a much better route,
yeah,
okay.
yeah. They're coming back. They haven't been around years, but they're coming back.
And then what was the main reason that they're not FHA approved, but?
Oh, when you build ground up construction and you want an FHA approval, you have to do a 10-year builder's warranty. You have to do all of these maniacal things that, huh?
Low income opportunities.
Sometimes if they're deed restricted is what they would call those, that kind of comes into play, but no, it's really the HOA. The HOA the developer taking on all the extra costs to get the FHA approval. And then they're only approved for a certain amount of time, like 10 years at a time or 20 years at a time. And then that approval falls off. And if they don't go back and renew them.
Plus their reserves have to be a certain percentage,
Their reserves, everything. The
yeah,
money that's collected each month has to be set aside for reserves.
right,
There can't be any special assessments,
So
there can't be
it's-
litigation, there can't be any
Right.
delinquencies.
Percentage of rentals and the.
Percentage of ownership by investors, you know, it has to meet all of those criteria. And, you know, HOAs, at one point, post 2008, have you heard of co-insurance for condos? Co-insurance is basically a lower insurance policy that says the insurance will cover 90% of the damage, and then the other 10% they'll assess to the homeowners. That was a big, nobody liked the co-insurance.
Sherman Oaks had, I think, a lot of that, like, so if they're doing a balcony assessment, it was 100,000, 60,000.
Then they
You
would
just like,
pass it
you
on.
gotta pay it,
I used to own a Lake Arrowhead condo, and 1 year, I don't know how many years ago, we had a giant snowstorm, and literally to haul the snow away, wiped out the entire reserves of the HOA.
Oh my God.
Just one winter, and so they assessed us the following year with payment units. I mean, just free thing, but you know, what are you gonna do? You gotta move the snow. That's where all the money's gonna come from.
wow,
So I mean, just,
yeah,
that's life.
yeah.
Okay, so this one has an income limit. Okay, what's the income limit? I said it earlier,
68,000. Wait,
No.
100.
112. Okay, 112 will buy you at 6.5% right now, 550 with no HOA. Probably. So.
My hobby.
And which one is this one you're talking
Conventional program.
That's a little desperate situation.
This is our conventional program, okay? I mean, it's so funny because like, just a year ago, this was 4%. One of the last loans we did was 3.25%. Can you imagine? I did it for an LA County Sheriff, bought him a West Hollywood condo for 3.25%.
Wow.
And all he had to do was put 1% down.
Wow.
Around 550.
Okay, 550. So where can we sell this loan at? I didn't get your name, sorry.
Maybe Palm Springs, I don't know.
Pastor,
Not even that, that's right. Unless the prices start to come back down.
Palmdale, Riverside, San Bernardino counties, Lake Arrowhead, these are gonna be the first that get hit the worst. Right? Now, with COVID and everybody being able to work from home, it's actually, this is my personal opinion, I love the desert, by the way. I have 2 properties out there. My dad lives there. Like the desert is my thing, But in 2018, I'll share a personal story. One of the homes that I own is in a country club, and the CFO absconded with about $450,000 from the country club's budget. And so they went back and they were trying to reassess all the members. This is the conventional program. And there was actually talk of closing down the entire country club. And this country club has 27 holes. And one of the alternates was, why don't we just shut down 9 of the holes and we'll sell it to a developer and see if we could recoup all this money. Well, my house is on one of those 9 holes, and I would be like, I no longer have a golf course frontage property.
Right.
So they ended up raising some money, ended up turning it around, and then COVID happened. And I will tell you, there's been a mad rush to the desert. I've never seen the desert in 30 years have the desirability that it has this minute.
Joshua Tree, all
A Joshua Tree. I follow a lot of YouTubers, especially these modern craft people. They all are all up there. And then you add Airbnb,
Oh, yeah.
right? And there's a big fight so there's about 7 cities in Coachella Valley. I don't know if you need to know this or not. It goes from Palm Springs, which is the west, all the way down to Mecca, Thermal, and then Salton Sea to the east. And every city has a different rule about Airbnb. And then every project has a different rule about Airbnb. So, some people allow it, some people don't. Some have a minimum of 30 days, some say you're grandfathered. I had one of those properties that was grandfathered, but I only had to rent it out 6 times a year to make what I needed. So it was a very comfortable, kind of situation. But back to my point is that I have personal friends that are in their 50s that no longer have to report to work, and they live in the desert now. They just live in the desert, so Palm Springs is no longer as affordable as it once was, even just 2 years ago.
I mean, the Airbnb thing is really risky because HOAs can always change the acceptance.
Any minute.
And I live in an HOA where it's just the neighborhood of single family, you know what I mean? So you might think that you could do it and then no,
It could be changed on.
yeah.
So
Does this program do manufactured homes?
this program does not do manufactured homes, which has come up a lot recently. I've gotten a lot of more manufactured homes. I have one investor that does manufactured homes, FHA, and they do have a conventional product.
Oh, is it a much higher rate?
No, it's reasonable.
Oh, okay.
It's reasonable. It's not much higher than today's market rate,
Oh, okay.
But it's
Well,
not a
that's
down
good to know.
payment assistance.
but it's not a down payment assistance.
Right, but that's good to know.
Yeah.
What's the down payment on that?
Well, just conventional financing
Oh,
and
okay.
FHA, so
What is-
3.5 or 5%.
Oh, okay, because a lot of the Malibu little trailer, yeah.
Well, so Malibu has a little bit more unique property situation, and I know because it's been around for a little bit. A lot of the Malibu stuff, the owner of the park
Mm-hmm.
has first right of refusal on any foreclosure. So it basically makes it ineligible for financing. No lender will
Well, if it's not, it's just a sale, like someone's selling their.
I understand, but what some of the park agreements actually say, I used to work at Country Ride, so we all got burned on these, that's why I know.
Oh,
Okay, so I'll give you a live example, Canyon View Estates in Santa Clarita,
right.
okay? The agreement with the park, it's a manufactured home on a permanent foundation, but it says in the agreement, in case of foreclosure, owner of the park has first rights or refusal to buy the property. So he bought all those properties and Countrywide lost every single dollar on every single one of those. Couldn't do anything. And he laughed all the way to the bank.
But what
Go
about,
ahead, foreclose.
what about non-foreclosure, just a manufactured home?
As long as there's no restriction in the rental park, the park.
Gotcha.
It's like its own HOA, basically.
Right,
It's like the ones on Silmar. You know, the 210, you know what I'm talking about? The northern part of 210, you know, those are not eligible for traditional financing.
oh,
You've
okay.
got to go to a mobile home lender because their park has that. Remember, they all burned down, you know what I'm talking about, right?
Yeah, but there's some up in Agora and.
Agora, yeah,
Calabasas.
they're around. They do exist. Acton, Agua Dulce, where it's single land, single property. You know, those are great units. Stallion Meadows, you know,
Okay. So you have a lender.
I do all know these, man. That's crazy.
I know.
I don't like random. It's just random.
Well, that's good to know, because that actually would be helpful, because those properties are pretty
Yeah.
reasonable.
So let's go back to just these first time home buyers, honestly. Okay. When we talk to first time home buyers, I said this in the last discussion, I'll say it again this time, okay? Are you employed? Are you making good money? Are you above or below this 112 number? Okay, because that's gonna matter, right? And then, when I say employed, not a gig worker, okay? What I see a lot in the 20-somethings, I have one, okay? He's a gig worker. Like, I mean, he waits tables 3 days a week, but he just has all these other little things on the side. So when you ask someone that's 20-something years old, are you working? The answer is yes. But do you qualify with your qualifying income for a loan? That's not always the case, right? So, I'm pitching my son, do you know what Turo is?
Yes.
Okay, I'm pitching him, I said, go buy a van. If you don't want to work, go buy a van. Rent your van out for $85 a day. $2,000 a month, right there. You do it all day.
I'm doing that right now.
There you go, Homer. Nice, side hustle. That's, so when we talk to first time home buyers, we as lenders have to do a better job with the amount of income qualification that we have with them. Are they full-time? Do they work from home? Are they remote? Do they have variable hours? Do they get overtime? Do they have a 2-year history of overtime? There's a lot more diligence that we have to do with that first-time home buyer, because they're not all walking into an $85,000 salaried job anymore.
But if you're, for example, in the movie industry and you're self-employed, like most of them are, but they work at a studio and their income tax shows they make, similar amount every year, you would go by that income tax, correct?
Yes and no. So I was a union member, IAPC, by the way, before I ever got into it. My family has been working on everything. Like my cousin works on Westworld right now, literally. They're actually not self-employed. They're paid a W-2 mostly.
Right, true.
And they also receive 1090. They also receive 1099 on different jobs like commercials and other stuff. And if they're in lighting or camera or on the stage, they can rent their equipment and also run through a Schedule C, depending.
Right.
So we have to look at a studio worker as a union worker first,
Okay.
because they're mostly union, and we take their 2-year of union earning average.
Right, because they switch shows.
Switch shows all the time. That's how we do a union worker first. It's a great example. And then depending on the time of the year, they all go on hiatus. And
Right.
when they're on hiatus is when they want to buy the house. It's always like that. It's like, so they're on hiatus January through March. We're trying to do a loan. They haven't earned anything for the year. We have to make sure that
Right.
we have to go to the program director. Is it coming back to work? Or when is hiatus over? What are their 2 years? Is this the same show? Is it not the same show? So again, the studio people are the actual gig economy, you know what I mean?
Right.
Literally. And the gig economy is booming right now. It's
Uber drivers.
Never seen anything like this. Just, it's not just Uber driver, it's Turo, it's
Agents.
just agents. I mean, well, you guys are a little bit more unique because you do make a 1099, so you can, like, most of you are self-employed, true self-employed. You file a Schedule C
Yeah.
or you have a corporation.
Corporation, yeah.
Yeah, these gig people, yeah, I made all this money, look, here's all my cash. No. My son has $6,000 in cash on his dresser. I'm like, go put it in the bank. And he just doesn't.
Some cultures
They don't
do
do
put
this.
money under their, like I had
I
happened to be a
know.
client who was born in another country and he literally had 100,000 under his mattress.
Well,
I said, we can't use that.
I won't pick on Hovick, but I worked in Glendale for 22 years, so
Yes, you got all
I
those
mean-
people.
he knows what I know. Okay,
That's
so I just think these are good programs. They're starter programs. They're not end programs.
right.
Right? And if we work together, like Selena and I, you're gonna get a referral. We'll do a quick qualification over the phone. And, you know, if it says, you know, go from step A to step B, give me your income documentation, let's do a review, you know, okay? You guys might be driving out to Lancaster, you know, to find a house. Or Kern County, or, you know, or,
Or CD Valley.
if rates are 9%. No.
Yeah.
So let me give you a little update because.
That's what I'm saying, I drive to see that one, I don't wanna go to Lancaster.
All right, so let me give you a little market update because there was a lot of stuff thrown out there, and being a lender, I think I do a little bit different than kind of what everything you said. Number one, rates did go up to 6 and they pulled back a little. Not much, 5.5, 5 3/4, okay? The stock market this week, if you ever want to watch the economy, watch the news this week. It started last night when Walmart basically started this morning, when Walmart, you know, our nation's largest retailer, said, yeah, we didn't have a good quarter in Q2 and we're not giving better guidance for the rest of the year. Okay, so it's a big item. Okay, the interest rates, long-term rates, 30-year rates are based on the 10-year treasury, not the prime rate. So even though we're going to raise interest rates by 0.75% or 75 basis points, that's going to affect what? Do you know? Credit cards, automobiles, not necessarily, it's not directly tied to mortgage.
Oh, okay.
So on Friday or Thursday, you're not going to go from 5 3/4 to 6.5. It doesn't work like that. Okay. The prime rate, which if you had a HELOC, you know what a HELOC is? Home equity line of credit.
Yeah.
Okay. Your HELOC today is tied to prime. So prime is what? Do you know what prime rate is?
Don't wanna know.
It is 4 3/4. So
Unless-
prime rate will go from 4 3/4 to 5.5% pretty much tomorrow. Okay, but your long-term rates aren't going from 5 3/4 to 6.5. You follow me? There's not a
Yes.
direct correlation.
Okay, I didn't realize that.
Well, that's why I wanted to say it, because I wish I could have said it to the whole group, because I'm like, okay, it's not. Now, bad news in the stock market, ironically, is good news for rates. So we actually hope for a little bit of bad news, not a whole bunch,
Yeah, I know.
just enough so that if you have to get out of stocks, you get into bonds, that we don't move the bond rate too high, because that's what keeps long-term rates lower.
Okay,
So that's your economics class for the day.
can we get that in writing?
Okay,
No.
so now the other piece of this, okay, is inflation. Okay, and what has happened to the gas in the last 4 weeks?
Skyrocketed.
And
It went
went down.
Went down, yeah.
I just filled up at Costco yesterday, premium $5.59. I was,
$5.39.
I bought the premium. I
Oh,
bought the premium. I bought the
okay.
premium.
I know, but.
I believe the hype. I don't know. I'm sure it's the same tank underneath. You know what I
Like,
mean?
here's
But-
the premium sucker. No.
I saw the light.
There's red dye.
Yeah, there's a little light. One every minute, you
Give me a
know?
Mildew premium.
So my gas bill was $11 cheaper.
Right.
just in a course of three
Yeah.
or 4 weeks. So that's a good sign. The other good sign is, as you saw, Congress is about to pass a bill for chips and bringing chips back into the states, manufacturing, chips in the state. Now, we won't see that for 3 years, 5
Right.
years from now. But the idea that we will invest
Right.
billions of dollars back in the US
Right.
versus what's gonna happen.
That's good.
And then the flip side is everybody's watching China and Taiwan, to make sure China just doesn't go in there and close all the Taiwan semiconductor, plants.
Oh, they sure will.
So, there's a lot of levers and pulls that are happening in the market, but this week was earnings, and then you have Alphabet, which is Google, okay? You have Google, Microsoft, Amazon, and Walmart, the big four, as you want to call it. So everyone's watching to see what they say going forward. A little bit of bad news, it's actually good for us. Rates stay a little bit lower. Housing kind of settles. We're in a settling part right now. You probably
Right.
see that. If it's a good property, it'll go for the list price, maybe higher. If it's a not so good property or not listed right, it'll have to wait to sell, because it's trying to find its, actual price. So nothing, that I'm gonna quote, unless as far as where interest rates will be later or farther down the line, but I do think that we may have seen at least, you've seen that, it tops off and then it comes back. It tops and tries it again, and we'll see a couple of that. But I think by next summer, we should have a really good next summer. You just, all of us, I tell my own loan officer this, just pack it up, pack it in and drive on. Call your realtors, go out on sales calls with them, knock on doors if you need to, market with them, because you're going to need, I think the best thing that I heard today is you are going to need a team to kind of survive, for the next 6 to 9 months. You just can't do it alone. Do you ever go down to Venice Beach and the one guy that plays the harmonica thing, bass drum, and guitar, that doesn't work. That one man band thing, maybe works down in Venice. You all know who I'm talking about too. You're good about it. So yeah, that's probably not going to work, but soon enough. But I'll stop there. Questions, concerns, feedback,
Thank
anything?
you so much. It was
Yes.
awesome.
This one.
Okay, in about a month, before I
Finish.
in about a month, I think what we'll do is we'll start doing the alternate products. And I will tell you right now, I'll finish on this. 1 out of 3 loans that we are doing today are non-traditional, non-QM loans. Bank statement loans, investor cash loans, because I can do these in the 7s,
Right.
and people are taking them because they know if I just hold on to this for an extra year or two. Because remember, in 2020 taxes for small businesses, they look like poo-poo, okay? I mean, if you were a small business guy, you went and took that PPP money and you didn't claim any income. Guy or girl, I should say, right? So until we get 21 and 22 under the books, which are the better years, small business people will take these non-QM loans. Self-employed people will take these loans every single day. And that is probably the largest group of people that are going to be buying right now.
And
Very interesting.
Ray mentioned
statistic.
about interest only. I gotta tell you, this really good structure that I did for somebody. They were selling their home, buying a very expensive new home. They wanted to make the offer non-contingent. The only way we could make it work was to put them into one of these no-doc loans. But, and the rate was on the high side. But the good side is we did it interest only. So what that meant was that they might start out with a $2 million loan at 6.875%, which is not going to be fun. The minute they sell their house, they can make that $500,000 payment on that on their new loan, get that way down, get that payment way down, and then ride out until they get their next tax returns or whatever the refi situation looks better. So it's really you make stuff work by being creative. And then I also wanted to mention that on the go forward, I want to really hype up my next class coming up, because there's 2 things that you can make money in this world, right? Generally speaking, there's the stock market and
Real estate.
real estate. There's so many ways to make money in real estate. And I think it's extremely important for us to understand more about what those ways are, for a variety of reasons, obviously. Because we're in this business, it's a great business. There's so many ways you can skin this cat, it isn't even funny. We should understand them, be able to talk about them. We should be able to think like our savvy investors. We should be able to put ideas in the minds of the people who haven't thought of those things yet. And we should line our own pockets in the process too, when we see opportunities out there. So my next coming class is gonna be on real estate simulations. And you wanna understand these. And
Real
you
estate,
wanna-
what was that?
Syndication.
Oh, syndication.
Yeah, and come, because it'll just be the start of, more and more to come. And thank you, Bill.
Thanks.
I would like to thank you Cindy for being in the business a long time. I've worked with a lot of lenders and I think all my clients need like out of the box. Things like, I mean, and someone who's willing to do it, because most lenders aren't willing to even take the time to figure out the different scenarios. They want the easy scenario, and that just, a lot of us don't have just, an unlimited supply of the easy scenarios,
These days, few, far between. Yeah.
So we appreciate your hard work and
Thank you.
Thank you, guys.
Thank all you
Appreciate it.
guys.
Thank
you.
thank you so much.
So, Carmela, by the way.
I'm even past the, how sad is that?
I want to do that. I'll give you another.
Cause what I wanna do is, I wanna start going to college. That's like, it's I wanna start to
But it's only for 1 year. She's doing just on the 10 hours. I think now it's.
And that way,
Yeah, we were going out. So yeah, she was probably too far.
I told Bill, I feel like I'm
It's, but I remember it's about
like that, she got like other stuff.
Like today.
But if we could.
It's gonna be another one that I gotta put my thinking cap on. I'll let you know.
Well, I
It's
was
from the
speaking
back,
with
so
my
you're
friend.
ready.
I'm talking to.
Jim pulls on the doctor call here. Get dressed here.
We take them as we get them, wherever they are.
You know, Joe, no, for that. Sorry. Hi there. Good to see you. Yes. Do you have, what's her name's number?
For sure.
No.
You're coming back here to make calls?
What can I do that?
Do you wanna make calls together? Just come over? Yeah.
Are you gonna be?
I'm going home. I'll make calls, yeah.
What service do you got? A nice office?
Yeah.
Using, Mojo and,
The commercial tree.
yeah, they moved into that last time.
Yeah, I did.
It's a good done.
I'm so lazy.
Easy to get.
Like, I think I can make it home. I gotta go to that. Right, access on the freeway.
Yeah.
How did your, prospect go?
I I down for like an hour and 45 minutes, I was like 27
It's called call tools.
What is that?
The commercial, Raymond said they don't use Mojo anymore, they use call tools, he said it's better.
Then Mojo?
Yeah, he said they're switching,
Really?
so I'm gonna check it out. I've
And
never
I
done it
remember
before.
Raymond said they tried everything. They tried everything.
So I heard of, like, you know, how you think you're open seven. I like that you
It's
can
not-
get expired. You can get that. with
Yeah,
Mojo, right?
so you can get absentee owners, you can
Yeah.
get FISBOs,
Yeah.
but you're not gonna get a lot of FISBOs right now because.
No,
Yeah.
but I really like the expired. I want those.
Expired, there's gonna be a lot of. Okay.
Yeah.
And absentee owners, people just wanna get rid of the property.
I get that script. I signed up for coaching.
Oh, no, so you know you were gonna go there.
It was, I decided like.
It's a last minute thing?
Yeah,
How did
I
you like it?
literally, huh?
How did you like it?
It's amazing. Like, I connected with people and like, literally, they've been doing it. That's why they're doing it.
What's the four, big companies, Amazon, Walmart,
Amazon,
Walmart,
Google.
Google, and what's the fourth one?
Did you say Microsoft?
No.
Yeah, he did,
Microsoft still
he
is
did,
part of it?
he did, he did.
Microsoft is still a good indicator?
That's what he said.
Interesting. Well, you know, they're the de facto, when you say CPU, it's Microsoft, like, it's either Apple.
Yeah.
And they're still much bigger.
Yeah.
That's right, yeah, it should be Microsoft.
So, the reason why I ended up going with my friend is, you know, everybody's like, oh, you've been doing this for so long, that's the old stuff. No, all the coaches, everybody first started with him because he's been doing it since
Are you gonna coach him
1975.
with him?
Yeah.
Oh.
He's been doing it since 1975.
I did, but he,
Oh, yeah. It's quite a bit of money that I'm putting in. But
It's gonna happen.
if it's not gonna work this year, I'm done. Like, if I don't make it this next year, that's it.
But when you get the database, you're good for it.
Yeah, but I need to start converting, which I will, I just need to, so I think just putting that pressure on myself will be good.
Pressure has to be somewhere.
Yeah, exactly. There's a good amount. Oh, sure, it is still recording.
Where's the first?
See, it's on camera, what I just said is on camera, so it's the truth. Cindy, it's still recording. Yeah, that stuff is.
Thanks, Cindy, always good information. Look forward to learning about syndication. That's what I want to get into. Yes, let's do it.
My son, and his girl Jen, he likes it a lot. Yeah, yes, he eats it, Jen,
The only reason I feel bad about doing it is because
all right, Joey. So nice to get a picture like this. Supermodel girl. She's so sweet. I know, teens are so weird, like they just don't, like, that's not so shy. Like, oh.
a little warm up.
Yeah, I know, I'm like, that was gonna be a lot. Yeah.
When it's time to leave.
No, no, no. Yeah. Can't really. I know. Thank you. You have one?
Yeah, and then grab some more champagne.
So
Is this your first one?
Yeah. Fantastic.
What is this time goes up like this?
Yeah, well, this has been extraordinarily special. And so much. So much. It's like- Good. Good. Yeah, so just gonna, like I was telling everybody, I met with my work family, you know, in the morning, and then I closed off with my kids and my people I gave birth to, and at night, so we're excited, having to do dinner.
So, are you really? I'm trying to.
Miles an hour.
One of those now, I always shut down. Even though I fight the focus, but it's like, I'm not really.
No, they have a lot, it's technically lined up. No, I know. Did one of them get out? I thought one got out.
Yeah.
Oh, well, that's at least, you know, it's a Johnny Cash. It's popular. It's popular. And you stayed out. Good for you. They do. No. Oh, did we get a?
We sit in class with like with the play group and like.
Okay. I can work out.
Really? Don't do that, it's not working. That's like a 40 years for you.
We're orphaned instead.
You did? Oh, no, it died?
Yeah, she's a little thing.
Cause I have no light in there.
I think she always.
Dry.
Oh.
Very dry. Not gonna do it.
Oh, I'm so sorry. I don't mean to throw you to you. We just met. And we usually wait at least a week. Your work comp. Blood sugar spike. I know that.
I am so
tired.
How's it going?
Good, how are you?
Well, you're gonna feel like. Great.
I know that it does.
I feel like I'm not for this, I'm like, since I already feel like I'm not supposed to go with this.
You will. Okay, okay.
That's how they tell me. Might as well. He was like, it all feels nice. No, you feel promise you make yourself. Well, have more.
Rich. Did you know about that? And there's a 3 o'clock class with Rich
Yes.
Pisani. Yeah,
Yeah, I'm here for that.
it'll be really good.
Oh my God. No, I just felt it, like, I'm a good secretary. Oh, I know now. And it hurts, right? No. You just keep coming up with worse and worse ideas.
We're just doing like a screwdriver.
Orange juice and
That's healthy, I don't know.
vodka. Orange juice is not healthy. It's a lot of sugar, right?
Orange is fruit. It's basic one.
Basic logic. No logic at all. Oh, this is so cute. Aw. See you later. You dress like Wayne. Thanks. You're so
Party. Workout party? Yeah. Oh, that was huge. Oh, yes, I do. However, the process for that is pretty much the same thing. Putting in it. That means I fill out like everything. But it's literally the same thing. We're just putting on that line. But actually, you should like go. That's it. I can do it. Yeah, so there's this page, I'll send you like a version of it. But if you put it on the report, right? You know how like, you know, yeah, and you know how like there's different sections like versus like the details, then it's like what is included in the house. It's literally that same thing, except for like the page of it. Yep, or somehow I'm going to shift this one drawing together. I don't know if you have stuff you have to do, but thank you. There may be other people that would want to. I am meeting after. I figured out. I'm sorry you are. Well, Luis is probably. Oh, okay. She wants to. Oh, I'll check with her then, because I'm gonna be able to. Right. Oh, that would be perfect. Yeah, I'll just check with her. Okay, cool. Okay,
So,
thank you.
you and I were talking about leadership in the office and all that sort of thing.
All right. Try again. Okay. So I'm gonna work out.
And then we have, we're looking for a team leader.
They have a mind of their own.
You needed me?
Yeah.
Oh, look, my thing is already falling. What'd you do? Why is this on? Is your class?
Oh.
Nobody turned it off.
Thank you.